Good morning, everybody. This is Brian Noble from TraderMobile.com with our weekly update on the stock market and the euro dollar. On my screen here this morning, I have the 15-minute chart of the S&P because since last Tuesday, when we had a downside key day reversal for the S&P, when we closed down at a level of 33.30, we've rallied 200 handles, which is an incredible move in just 4 trading days. And as you can see on the 15-minute chart here, we've left 4 gaps. 1, 2, 3, 4, and as you know from S&P, just to let you know the gaps work basically from the close in Chicago. So London time at 9 p.m. we have the close of the cash S&P to 2:30 opening the next day, and anything if the market has a price difference between those two time differences, that's called an open gap. And all these open gaps over time get filled, but I have never seen 4 open gaps of this significance before. So I'm looking to reverse these markets. I know we've rallied strongly ahead of the Apple launch of the new iPhone this afternoon, but the S&P up here to me around, if I just click onto the daily chart, as you can see, we're just about to test the 35.80 high that we had back on the 3rd of September. So we had a move down to just above 3,200 and all the way back up again. And as you can see, the 50-day moving average is the key. So once we're above this 50-day moving average, the market tends to rally. And then when we break that back below it, then we set off, as we can see here, and can be quite an aggressive set off. But once we broke back above the 50-day on Wednesday, then the market just resumed and went 200 points higher, which is an incredible move. So I'm actually short here at 35.30 in the December contract. Equivalent to 35.40 in the S&P cash. I'm looking for a move back down to 34.50 and then eventually a test at 33.85. I know we've got less than 3 weeks to go to the election, and I just think this market is incredibly overdone. If I move over to the Nasdaq, which has had an even bigger move, the Nasdaq has actually rallied 13% since September the 24th. An incredible move here from 10,677 low all the way up to the futures trading at 12,180 this morning. So just shy of the 12,500 from the September the 3rd when we fell almost 20. And now we've rallied back, nearly regained the whole thing, again with loads of gaps in between as well. Yesterday there was even though it was Columbus Day in the States where the credit markets were closed, the stock market still rallied, and due to the lack of liquidity, the bulls just drove the market higher. And we rallied end of the day with a 3% gain. I'm also short the Nasdaq in the futures from this morning at 12,180, looking for a move back to kind of around the 11,750 for this gap here from the last Friday, and then we'll reassess when we get down there. And that's basically where I am. And also on the Dow, having been bullish the last time we did this update, I've changed again. The Dow is not as aggressive as the S&P and the Nasdaq. The Dow is still way behind its September 3rd high, which is a new contract high at around the 29,000 area. So I think anywhere from 28,900 to 29,100, I'm a seller with a 200-point stop, looking for a move back to the 28,500 area, back around here. Again, the Dow also left 4 gaps from last week, but it was not as big a move as the S&P and the Nasdaq. And then switching over to the euro. Euro is actually traded in a very narrow range over the last 2 weeks since I last did an update. We're kind of hovering around the 50-day moving average. We broke a low, got down to a low of 116.10 2 weeks ago, and then we gradually moved higher. The 50 days trading around 118.02, but it's interesting with the euro trading around 117.90 as I send this video. The euro should have been higher based on the move in the US equity markets over the last few days, and it hasn't. So this might be a sign that the dollar is beginning to reinvent itself again, and that we should, if we can just continue to hold below the 50-day moving average, we should see a test back to the 116 area. That's key. Any break of 116, and then you're looking at a move down to the 114, 114.80 area, where I'd be an aggressive buyer. So for now, I'm looking to sell rallies in the euro, looking for a move down, and I think this euro will eventually lead the US indices lower as we get nearer and nearer the election, because it's quite clear the stimulus, I don't think, will happen until after the election. And as we know from the global financial crisis in 2008, most of the equity rise has all been based on stimulus packages. If we didn't have any stimulus packages, or QE, for want of a better word, from the Fed, then these markets will be a hell of a lot lower than where they are today. Thank you for listening, and I'll be back next week with a new update.